Welcome to the first episode of Blockchain Made Easy by ReadOn. Today, we pick the brains of Mr. Rohas Nagpal. Mr. Nagpal is a globally renowned blockchain enthusiast leading three projects in this space. Over his 20 plus years of experience, he has assisted the Government of India in framing draft rules and regulations under the Information Technology Act. His work spanned 18 countries, and he has investigated cybercrimes and data breaches for hundreds of organizations across many sectors. He's the author of the Future Money Playbook, which is my personal favorite when it comes to understanding cryptos simply. Welcome, Rohas. It is our pleasure to have you.
My pleasure. Thank you so much for inviting me.
Super, Rohas. Absolutely. It's like we've been given the chance of being a 5-year-old and just discussing whatever comes to us. So, Rohas, we want you to explain your journey, how you landed up, looking at cryptos, or what excited you about this space.
Sure. So about 10 odd years ago, I was helping in the investigation of a case relating to the drugs being sold. So what had happened was there were these three youngsters and they bought drugs from somewhere. And one of the guys started hallucinating and he started seeing zombies everywhere. So that freaked him out so much that he started banging his head against walls. And he actually died because of that.
Damn.
So now what the police wondered was that what is this new kind of drug that has come into the market? Now, when we started our investigation, we realized that there is this youngster who sits in a coffee shop. You go to him and you give him cash. He would then convert it to something called Bitcoin. And that was the first time I heard that word. And then he would give you a number. So say 84. Now you would go home. A few days later, a book would come to your house through one of the famous e-commerce companies. And you would open that to page 84. It could be a Harry Potter book, for example. Now you would tear that page out, cut it into small pieces, put a piece on your tongue, and the drug would take effect. So, these are those chemical synthetic kind of drugs. They are like colorless, tasteless, odorless. So if you take a glass of water, it looks just like that. You could dip a brush in it, put it on a piece of paper. The moment the paper dries, even a police dog will not be able to sniff it.
Wow.
That's how I got introduced to the concept. And in fact, you must have read about a site called Silk Road. So that was a really famous dark market place for drugs, arms, fake documents, you name it, you would get it there. And they did more than $1 billion of trade. I'm talking about way back in 2011, completely on Bitcoin. So that's how I got introduced to cryptocurrencies. And at that time, there was just one, which was Bitcoin.
Wow.
That is insane. That is
quite insane.
Absolutely amazing story. Wow.
So then I started to read a little bit more. I looked up the white paper, read it. It's brilliant. Everybody should read it. And it's not as tech as people think it is. It's quite easy to understand it. Now, interestingly, at that time, I managed to do a little Bitcoin mining. But I am one of those few unfortunate people who did not realize the potential of Bitcoin at that time. And we deleted ours. So many people at that time used to mine, have fun with it. And then we thought, okay, yaar, what is the value of this? It's nothing. So we actually deleted Bitcoins. Now, even today, we can see those Bitcoins on our addresses on the blockchain, but unfortunately, we cannot get it back. And in fact, I know today I can laugh about it, but every time I talk about it, it really pains me. You cannot even imagine how bad I feel about it. But that's a very important thing for everyone to remember that, when you have a normal bank account on your phone, your app, if you delete the app, nothing happens. You can always reinstall the app, your money is safe. But in most cryptos, or rather in most wallets, that's not the case. So you have something called custodial and non-custodial. So, which means if you delete that app, your money is gone. Because there's no way for anyone else to be able to tell you what your private key was, and you will never be able to control your money again. So that's a really big issue that everyone must remember.
Wow. Which is also very, very interesting. It's like my money is right there, but I just can't access it.
You can see it.
Yes, you can see it.
I sometimes go on the blockchain and I see those coins and I say, hey, these are mine. But there's nothing I can do.
Wow. And
so in fact, there's this one guy who threw away a hard disk, which had tons of Bitcoins on it.
Whoa.
And then he's now trying to actually get it back from the landfill, which you can imagine landfills are huge. So he's actually trying to figure out, can he try to find that hard disk again? There's another guy who has the disk, but he's forgotten his password. So yeah, there are lots of such unfortunate people like us around.
Wow. So you actually mined Bitcoins, but you ended up deleting the addresses. So that is just
Any
So
idea
at
how
that time, that
much?
was the only way to get it.
how many Bitcoins?
No, I don't even want to think about it. But you can understand that at that time, the block reward was 50 bitcoins per block. So if you mined a block, you had a bare minimum of 50 bitcoins. Well, most of us had more, but I don't even want to think about how much it's worth.
I'm feeling so bad right now.
Your face is
But
not
I
showing
think-
it. You're still laughing away.
Yes, at the end of the
But I
day,
get it,
that is
man.
what you can
My
do.
fault. Yeah.
But I think that brings us to a very, very interesting start to this whole thing, right? What is exactly crypto? What is
Very
cryptocurrency?
good.
Yeah.
Sure. Let's start with a very simple example of the stock market, since many people know what shares are. Now, a company is a separate legal entity in itself. You can buy part ownership of that by buying the shares of the company. So, as the word itself is share, you're buying a share in the company.
Absolutely.
And you can understand what the company does. If it does well, it makes more profits. You, as a shareholder, earn more money by way of dividends or the price rise. Now, what happens in a blockchain project, you would realize that some of the biggest blockchain projects of the world do not actually have a company. Like Bitcoin, there is no company behind it. It's just a random bunch of people. In fact, people like me at one time who were miners, we were miners. Like even today, we do some mining for fun. Anybody in the world can connect, download and run a node, do validations, mining, but there is no company. So you're not buying shares of a company. And what the blockchain project has done is it is issuing a certain number of coins, so to say. I mean, you could say in a way they represent shares of that platform, but they do not represent any kind of ownership.
Got
So
it.
a crypto, there are of multiple types. The most common being what we call a coin, or a token, or a stable coin. These are usually three very important distinctions. So a coin is a crypto which runs on its native blockchain. So Bitcoin is the name of a blockchain, and on top of it, there is a coin called Bitcoin which runs. So we call Bitcoin as a cryptocurrency coin. Ethereum again has a blockchain of its own. Yeah. The
Right.
blockchain platform, which is usually called Ethereum, and the currency is actually ETH or Ether. A lot of people call that also Ethereum, but it's not. That's ETH or Ether.
Okay. Got it.
Now, Ether is the coin running natively on the Ethereum blockchain. Other people can come and run their projects on it, and those are called tokens. So, for example, there is
Okay.
a basic attention token, or you must have heard about Uniswap. It's quite a popular
Yes.
DeFi solution. So, again, Uniswap has its own token running on Ethereum. So, do you get the difference between a cryptocurrency coin and a cryptocurrency token?
So coin
Clear?
is a native.
Coin is the native,
Yeah.
yes. A coin is a crypto running on its own native blockchain. A token is something running on someone else's blockchain.
So basically,
Then there is
we can summarize this as a blockchain is basically like a railway track on which a lot of trains can
tokens
run,
could run. Yeah,
a
tokens
lot
could
of
run.
tokens
Yes.
could run, or its own.
All blockchains don't allow this. All
Okay.
blockchains don't allow this. So, for example, Bitcoin doesn't allow
Yeah, that
this.
is what I was thinking.
Yeah, so then there is something called a second layer solution which would come, which could allow you to create on the second layer, but not really on Bitcoin. Like Ethereum allows you to create.
Okay.
Bitcoin doesn't, Litecoin doesn't, Bitcoin Cash doesn't, Bitcoin Gold won't, Bitcoin SV doesn't. So some of them allow it. That's when we usually call them the DeFi platforms or the decentralized finance. Some don't allow it.
Got
This
it.
part clear? And then there's the third category which we call as stable coins. Now stable coins are very different. They are pegged or linked to something. So most common is the US dollar. So you may have heard about something called the USDT.
USDT. Yes.
So there is a startup in Hong Kong called Tether. What they say is, when your money in dollars hits my bank account, I will generate that same number of USDT and give it to you. So now you'll wonder, why do we need a dollar pegged thing on a crypto platform? See, suppose I'm investing in the market, but I feel over the next few days there's going to be a lot of volatility and I want to exit. Now I will sell off my cryptos. But now if I convert that money to fiat and move it into my bank account, there's a lot of time and charges that will come in. So what I would do is sell my crypto, convert the money into USDT, for example, and leave it on a crypto platform. I am no longer subject to the volatility because I am holding the US dollar. But because I'm not withdrawing it into my fiat bank account, I'm not facing those charges, and time is
Got
not
it.
getting wasted. Whenever I want to now come back and buy, I can instantly buy it. And that
Got
is
it.
what led to the growth of stable coins.
So basically, you can hedge your position, whichever it be, using these USDTs, which
No,
are
I
like
wouldn't say hedge.
derivatives.
No, actually, hedging ke liye we have separate derivatives.
Hedging currency itself, hedging
This
US
is
dollar.
being done. This is being done when you are exiting your crypto holding and reaching and putting it into a low volatility crypto, which is a
Got it.
stable coin. So, for example, I'll give you a very simple example. So, a few days ago, I felt that, okay, the market is going to crash. So, immediately what I would do is sell off all my tokens, convert it to USDT, and leave it on the exchange because they will give me 14 to 15% per annum return on that USDT because they will lend against it. So, I have not moved the money into my fiat account. I've translated it from cryptocurrency coins and tokens into the USDT stablecoin and left it there on the
And
exchange.
one more thing, you said USDT pay, you'll get interest 14
Yeah.
to 15%.
Yeah.
How does that work? I mean,
Sure. I'll explain. So what happens is just like in a bank, when you put your money, you get interest. Now, how does the bank pay you interest? Because they lend the money.
correct,
Same way, on the stock market, there are many people ready to buy and sell on margin. Now,
correct,
that guy needs a stable coin or something to buy with. So now what happens is, let's say you go to this exchange and you say, okay, I want $100 worth of loan and I'm going to put $50 of my own. So my total portfolio is 150. Now that portfolio is locked by the exchange. I'm simplifying it down, is locked by the exchange. And you can now buy $150 worth of crypto, which is again locked by the exchange. So there is no risk. The moment the crypto that you're buying falls below a certain level, they will liquidate your position. So as a lender, my $100 which is being used by you is 100% secure unless the exchange defaults. The borrower cannot default because it is all being held there. And you are only allowed to invest into cryptos on that exchange. So they are maintaining a proper collateral. See, what happens in a bank is when you take a loan, let's say you say my house is worth 1 crore or my factory is worth 1 crore. How much loan does the bank give you? Maybe 70-80% at most.
Yeah.
correct.
And 20% you put of your own. In a crypto exchange, it may go up to 150%. So they will say, you need at least 33% as your margin, which will be stuck. And you're only allowed to invest in cryptos on our platforms, and they are going to be locked. So the chances of default are almost zero.
Hence
And interestingly, it's not only stable coins you can lend. You can lend other cryptos also. So you can lend BTC, you can lend BTT, you can lend ETH, and I'll tell you why. You know the concept of a trading pair? So for example, when you go to a nearby shop and you say, I want Parle-G biscuit, in what currency is he going to give you the price? In rupees?
Correct.
So you can say Parle-G is 5 rupees. So there is a trading pair called Parle-G versus INR. Now you go to Singapore and you ask for the same biscuit. By the way, you do get Parle-G in Singapore also. So there they will give you the rate in dollars, Singapore dollars. So we can say that is a separate trading pair. Parle-G, comma, Singapore dollar. Similarly, when you go to buy exchanges, you go to exchanges to buy cryptos, you will get the quotation in multiple pairs. Bitcoin, ETH, USDT, USDC, ऐसे बहुत सारे होते हैं. So that is the reason you can lend not just a stable coin but even cryptos.
Because and I've seen this on WazirX. There's a top bar where there are different denominations for the prices of every crypto. So one is in terms of INR, one is in terms of USD.
Absolutely correct. Absolutely correct. Yes.
Correct. And it makes it so easy to look at it from different currency perspective also. Stock markets, we can't do that today. Right.
In fact, one of the biggest advantages of crypto is it is the only financial market which runs 24/7 by 365.
Yes.
Aapka stock exchange will run few days a week. All exchanges run for limited time period. Crypto is the only thing, and that's a problem also for many people.
Exactly.
Because a trader doesn't get good sleep ever. He doesn't know what is going to happen when.
No one knows when Elon Musk is going to tweet.
Yeah, exactly.
That is unfortunately a very sad part of our industry, that a single person's tweets are able to affect it, and that is actually, that shows that the industry hasn't matured yet, but we're getting there.
It's great to hear from evangelists like you that you also agree that it hasn't matured. So
No, it hasn't. We are first of all, we're very new. I mean, it's a new industry, right? It's barely not even a decade old. I mean, Bitcoin's barely a decade old. Baki sab to they're very new.
Yeah.
And plus, when you look at the people there, obviously the thinking is very different. The way you would think about the stock market, you cannot think like that in crypto. Crypto is, I would say, as of today, unfortunately, 99% driven by social media or
Right.
by influencers. The thing about looking for fundamentals or not, we're still a long way away. But then you can't compare us to the stock market, which is like centuries old.
That is so true.
Absolutely makes sense. Absolutely makes sense. Rose, one aspect from your book that I absolutely loved was how you brought the whole, how money works, that whole concept from the barter system down to where we are today. So I would love you to, just take us through that journey, that history of money.
Yeah, same. Even I love that story.
Sure. In fact, you know what? Surprisingly, the crypto world is actually going more towards barter. And I'll explain that to you how.
Yeah.
We were
So
discussing
what
something
happened?
like this.
Sure. So what happened in the barter world was, you are a guy who makes blue colored pens, and now you want to buy, say, a book. So what would you do? You would actually go to the market and try to find somebody who has this book and who wants the blue pen in return.
Correct.
Now this worked okay as long as you were able to find people who wanted the same thing. But now suppose somebody says, no, I want only half a blue pen. It's not possible to divide this pen into two. So then people realize, okay, you know what, the barter system doesn't make sense because earlier human beings needed only very basic things. But as the human society grew more complex, we needed so many different things. So then they realized that they need to move on to something which can be quickly divisible. So then things like salt came into the picture, cowrie shells came into the picture. So you try to find something that was limited quantity by nature itself, not something which you can make billions of, but nature will give you scarce quantities. So somewhere, somebody in the world then one day discovered gold. Now I'm sure the guy who first discovered gold and tried to convince people that it is valuable, he would have faced the same issue that today crypto people face, where a lot of the people will say, oh, this is rubbish, it doesn't make sense. What these people don't realize is, I am sure gold was treated the same way at one time. So were diamonds, and so were so many other things. These things take time to get into your head. So the world then moved on to things like gold. Then what happened was, came in the political money, where kings realized, you know what, we don't have so much gold, but we want to keep issuing more and more money. And that's where what we call as the fiat money came in. Now, fiat money has no value on its own. It is valuable
Correct.
because a government forces you to accept it and says, if you don't, I will lock you in prison. And that's where money comes in. Now here, if you can just look at any currency note, if you realize, you take an Indian currency note, it has a promise on it,
Correct.
which says, I promise to pay the bearer the sum of 500 rupees. Signed by whom? Governor of the Reserve Bank of India. Now my question to you is, that currency note, is it actually 500 rupees? What do you think?
No.
It isn't, because if it was 500 rupees, it wouldn't say, I promise to pay
Yeah.
you 500. So that currency note is defined under the law as a promissory note payable to the bearer on demand.
Right.
Now my question to you is, can I start issuing my own promissory notes like this, and instead of Gandhiji's photo, I'll put my photo? Instead of the Reserve Bank governor's signature, I put my signature. Can I do it? What do you
Can, but
Absolutely not.
No, I can't, because there's a law
Prohibited
which
by
stops
law.
me from doing it. Yeah. So
Correct.
what happens is, you must
I don't know.
remember, the law doesn't tell you what you can do. The law only tells you what you cannot do. And then if you do it, what is the punishment? So the law says that nobody other than the Reserve Bank of India can issue a promissory note payable to the bearer on demand. Which means if I was to issue a promissory note, I have to put either a date or the name of the person, or both. But the only person who can go against this is the Reserve Bank, and that's what we call as a currency note. And in fact, if you go to the Reserve Bank governor and you return that 500 rupee note, what do you think he's going to give you?
gold.
No, that's
No,
a very common
it's not backed by
misconception.
gold.
See, I have not tried it. I have not actually gone to him. I'm sure he'll probably shout at me and throw me out of his office. But legally, he would probably give you coins or 1 rupee notes. Both of those do not contain a promise, and both of those are issued by the central government.
Central.
If you look at a 1 rupee note, which used to come at one time, it's signed by the Secretary, Ministry of Finance.
Correct.
It does not contain this promise. So that's actually the rupee. And this is a promissory note. And now, surprisingly, these are not backed by anything. People feel that it is backed by gold and all. Not really. The last currency which was backed by anything was the US dollar, backed by gold up till 1971,
Correct. Correct.
15th August, if I'm not mistaken.
Right.
And that is when their President Nixon suddenly said, we no longer will be giving you gold against the dollar.
Correct.
But because they were the most powerful currency, the world continued to peg to the dollar.
Correct.
The dollar is
Exactly.
not backed by anything, which is why very recently the new US president issued, I think, about 1.4 trillion and distributed to citizens as part of the COVID rehabilitation kind of program.
Correct.
They did not need to hold anything against it. They can print how much ever they want. And
True.
that is the problem with fiat and why it can crash very easily, which has happened so many times in the past.
Absolutely.
Most recently in Venezuela, before that in Zimbabwe, much before that in Germany, because it's not backed. And that is why many people say Bitcoin is anti-inflationary because it has a limit of 21 million Bitcoin. Now, how does this limit come? It's a very interesting concept. So when the Bitcoin blockchain started, once a blockchain starts, you can't really go back and change anything. So the first block is called the Genesis block, block number 0. In that, certain instructions were hard-coded by the creator. Instruction number 1, a new block should be formed approximately every 10 minutes. The reward which would be given when a new block is created for the first 4 years would be 50 Bitcoin. Okay, he didn't say it in years, he said it in number of blocks. I think 210,000, I'm not sure of the exact number of blocks. Every 4 years approximately. After 4 years, it would become 25, then 12.5, then 6.25. So if you ever heard of the term, the halving of Bitcoin, that's what they mean by this. Approximately every 4 years, the block reward gets half. Now, this will continue to become half till the year 2140 AD. And that time, it will go to 0. And you will not get money for a new block, you will only get transaction fee.
Okay.
So, now you'll wonder, why am I saying approximately 10 minutes? Because every block, there's a process called proof of work which is happening. I won't go into the details, it's highly technical, but I've got a bunch of videos on that if anyone's interested. Every 10 minutes, a bunch of miners from around the world are trying to calculate a number called a nonce, which could begin from 0 and go up to a really large number. The first guy to calculate the number usually wins the block and gets the block reward. Now, nobody in the world can predict how long this will take. A block could take 3 minutes, it could take 30 minutes. It's purely random. So, again, every 2 weeks, the system automatically looks at the past and calculates what was the average time taken. If the average time taken was 12 minutes, then the system says, I must reduce the difficulty of this mathematical problem. Again, 2 weeks passed. Now it says it's become 8. So system says, no, now I must increase the difficulty. So the system auto-adjusts the difficulty every 2 weeks to try to reach an average of 10 minutes. Is that clear? And that's why we say Bitcoin has only 21 million max. Ethereum or Ether, on the other hand, has no limit. So when you look at any crypto, there is circulating supply, maximum supply, and total supply. 3 different terms. Always look for the max supply. And you will realize in ETH there is no max supply, which means they can create billions or trillions of them in the future. In Bitcoin, it's fixed to 21 million.
So from that perspective, Ethereum or Ether could also be like, so you're talking about Ethereum blockchain, right? That it can
the ETH currency
have as many.
Yeah, the ETH currency, you can have any number of them.
And that would be like we have the normal currency today.
Absolutely
right?
correct. Absolutely correct.
Why would they choose to do that? If the inherent philosophy behind the cryptocurrencies is to hedge or to solve for the inefficiencies of a fiat currency?
Because what you're saying is right when you come to a medium of exchange or maybe a store of value, but actually ETH was not meant to do that. ETH, what the beauty of it is, it's creating the base for decentralized finance, where anybody in the world can come and run a token or a project. ETH is supposed to be the fuel for that. That whenever you want to do anything on the platform, suppose there is no transaction fee, then a spammer could come and make millions of transactions and bring the entire system down. So ETH was there that you cannot just come and make free transactions. You have to pay a gas fee. In fact, the term is gas fee. It's a fuel. Now, let me ask you a question. Why do we buy petrol in real life? You and I as normal people, why do we buy petrol? Because we want to go somewhere. Now, what happens if petrol becomes 1,000 rupees a liter tomorrow? You are either going to start walking or you're going to look at alternative fuel sources. That's the problem Ethereum is facing today. The gamblers have come in who only want to make money on it. So the legitimate guys who want to run businesses on Ethereum cannot do it anymore. So many projects have shut down because the gas fee on Ethereum has become ridiculously high. You want to send me 10,000 rupees, and for that the gas fee will be 5,000 rupees. Does that make any sense to you? That's what's
Not
happened
at all.
because of what we call as a sattebazi. So they are the guys who are coming in and they say, I want 5x returns, 10x returns. Boss, those returns you only get in gambling. So आप घोड़े की रेस में चले जाओ, आप lottery ticket, you buy a lottery ticket, you buy horse racing tickets, or you buy crypto. That's what it is becoming, and that is creating a huge problem for the industry. So the industry is actually divided into two kinds of people. One who are actually running businesses on blockchain, and one who are here to make a quick buck, and their interests never align. So somebody like me will just move away from ETH and go to say Binance or Cardano or some other Polkadot platform. Today those platforms are cheap. When the sattebazis reach that platform, the rate of that also will go up so much it will be impractical. Which is the only reason
Correct.
that I have now started a new project where we have a public blockchain which by default does not have a native crypto, so it can never have transaction fee because we are not able to run our business otherwise. So there we are saying the only rule is that you get KYC, so we know who you are. So the chances of you now trying to sabotage the system are lower because in Ethereum and all nobody knows who you are. So you can do whatever you feel like. So that's the whole problem with what is happening with
And
crypto.
I think that's the first one and the only one which has full KYC, right? We're talking
We're,
about the future money
we're
wallet,
talking about the hybrid, the HyFi blockchain, which is the
hybrid
hybrid
finance.
finance blockchain, where we are trying to bridge the centralized world with a decentralized world. It is not practical today for a regulated entity like a bank to use an Ethereum because you don't know who you're dealing
Correct.
with. The guy may be a
Correct.
terrorist or from a sanctioned country. That is the reason we need 100% KYC and 100% anti-money laundering checks.
Makes sense. But you were rightly said that speculative people have come into the scene and are exploiting this space, and they don't even know what they're doing right today, what they are betting on. They're just looking at the frenzy that's going on and then trying to just be a part of that wave.
Correct.
But what do you think? How much part has these exchange platforms played by making this onboarding process very, very simple and all of these things very, very simple to transact on these
Sure.
platforms and not worked on the literacy aspect of it because it doesn't make money?
Okay. So I cannot comment on behalf of them because I don't know. I'm sure some of them are taking efforts to educate people. I hope so. But fundamentally, a centralized exchange goes against the philosophy of crypto.
Exactly.
Cryptos are about decentralization. But
Exactly.
unfortunately, what has happened today, cryptos have become very centralized. Ultimately, today, who controls Bitcoin, so to say? On the one hand, a bunch of miners, which are not too many in number, and on the second hand, a bunch of these whales who hold a large number of it. It completely goes against the concept of decentralization. A centralized exchange again does the same thing. You are supposed to use decentralized exchanges or peer-to-peer marketplaces. But unfortunately, like I said, because people have made it a satta or a gambling, it's moved into the wrong direction. And I'm hoping that this current fall that we are seeing, I'm hoping it gets worse. Because I want the number of people getting into the crypto industry to reduce and only serious players come in. People who actually understand the projects and do research and buy it with some logic, not just buying a Dogecoin or a Shibu coin because it will become 10 times. Why? I mean, just think about it. If it is not solving anything, why should it keep going up in terms of prices? Think about it.
Absolutely. And I think from this perspective, my personal perspective also changed about blockchains and cryptos when I realized that yes, there is some fundamental value to these, right? There is some fundamental truth within the technologies that these people are doing. They won't have factories that are set up which you can sell, but these are technologies that we are building using our brains, right?
True.
And that is the where the fundamental researchers will come into the picture. And as we say, there is a fundamental side to stocks and there is a speculative side to stocks, or a traders platform for stocks.
Sure.
That same thing will happen with bitcoins and blockchains also.
In fact, take the example. Many people hate WhatsApp, Facebook, Instagram. They're all owned by the same company. But why are they one of the most powerful and richest companies in the world? Because they're useful. People
Exactly.
find their product or service useful, and that's why we use it. So it makes sense that even though Facebook and all will not really have a factory per se, but they're doing very well, or a Google or a Microsoft or a Netflix, it's all digital, right? Cryptos are also like that. But the crypto in itself is not the important thing. It is the underlying platform and the use cases on which it is being built. What is happening with it? That's what makes it important. What if tomorrow Netflix has only Spanish movies? It won't work in India. It'll work only in
Correct.
Spain. So it needs content for India. So similarly, a blockchain is a platform. Now it depends on what you're going to do with it. And that is where the important thing comes in.
Because
Super.
from a technological point of view, is there any way through, and I'm not very, very knowledgeable in this field, so spare me if I'm saying something really stupid, but is there any way you can stop any decentralized platform from getting centralized in this way? Because it feels like then theoretically any decentralized platform or technology like this can be controlled by centralized
Excellent.
forces.
Very, very good question. Let me give you a practical example. So when Ethereum started, somebody built something called a DAO, Decentralized Autonomous Organization. So that's a smart contract. Different people put money and then they vote on how you're going to invest that money. Now, somebody found a flaw in the coding and misused it and siphoned out equivalent of $65 million. Now, what should happen? In an ideal situation, nothing. It's a decentralized, it's a blockchain. You are not supposed to roll it back. Money gaya gaya. You're supposed to just live with it. But what did they do? They took a vote and they decided to roll back a certain number of blocks so that the money goes back to the people who were defrauded. And at that time, some people did not agree with it. So then Ethereum broke into two. The original Ethereum, so to say, which is not original because it actually rolled back. So I would say that's the copy, but that's still called original because the big guys went with it. That's what we call today as ETH. And the one which didn't roll back is called ETC. That's the Ethereum Classic. So Classic continued with the original thing saying, no, boss. The logic of a blockchain is immutability. If you start to reverse it, it's over. It is as good as having a private database. Now, unfortunately, the Ethereum Classic coin is less than $100, whereas Ethereum has gone like reached 4,000 and now it's dipped again. But this happens. And this proves to you that blockchains are also centralized in nature. Certain people can control them and they can start rolling them back. And that is a very dangerous sign. So, which is why you see even in Bitcoin, it is ultimately a bunch of miners and then a bunch of really big whales. And then people like Elon Musk, we don't know how much he owns. But if his tweet can move the price, what decentralized? It's rubbish.
Absolutely.
Exactly.
On that
Well,
point,
with
I
all due
think
respect to him, he may be a really nice guy. But come on, one random guy's tweets cannot bring down Bitcoin. It just kills it.
absolutely, absolutely. We used to see this in our Harshad Mehta times also when he would just raise the stocks up. I think that's human
This is on
tendency
a
to.
different scale.
I think it's human tendency to make gods out of humans. So that will keep happening. I think this is a good place for us to uh, drop off, and then maybe in the next episode we can discuss and go deeper into some of the aspects that we want to cover. We'll keep doing this. We'll add all of the relevant links in the description. Do check them out. We'll also add the link to Rohas's ebook, and it's absolutely free of cost. Just download it and read it. It's super, super easy to understand. We are not from a tech background and we understood things a bit at least. Thank you. Thank you for your time, Rohas. Thanks, Kant.
Bye bye. Nice speaking to you guys.
Bye bye.